Welcome back. You're watching Buy Now, Sell Now on ET Now, and now time for the queries. And first one is from Tarun, and he's saying that he's wants a short-term view on Honda Power. Kunal, I'll come to you on this. I believe he wants to talk about Honda India Power products. How does the charts for this counter look like?
If I look at the overall formation of the counter, it's been the sideways consolidation counter since almost 2019 till now. Recently, it came in the momentum, and if you look at the formation wise, the breakout seems to be at 1350. Counter is right now trading at 1230. Extremely volatile counter. Last week, it actually went up to 1400 and came back to 1220. So what I would advise is keep a little longer horizon here. If at all it's a very short-term approach towards the counter, then keep the stop loss of 1065 so that we are not triggered out unnecessarily. I think this consolidation may come to an end very soon. 1350 will be the trigger to watch out for. If the counter remains about 1350, then I expect the counter to reach to 1600 on the higher side.
Okay, I want to come back to you, Kunal, right at the onset, because we've got a couple of viewers who are looking for a view on the Nifty, particularly Sagar. He's wondering if in the near term a 16,500 would be too optimistic a level to look at.
All right. Alex, if I look at the overall formation of the Nifty, it's clearly making higher top, higher bottom, undoubtedly very bullish formations on the chart. So 16,500 is something, yes, seems as of now highly optimistic. The first level to watch out for will be say 16,100, and if that's triggered out, then 16,500 is on card. But provided from here, if we find any decline coming in market to the extent of say 100 points to 120 points, I will consider that to be a buying opportunity. And this is advised based on the mid-term positional view of the market. So not extreme short-term, but yes, positionally remain optimistic on the market. 16,100 first level to watch out for, and above that 16,500 for Nifty.
All right, the next query is coming in from Ramesh, and he's saying that he's bought Astrazeneca 56 shares at 4,070 rupees per share. He's actually seeing a loss of about 10% on his current holding. He wants to know how to go forward with this current holding of his in AstraZeneca. Kunal, what's your take? How are the charts looking for AstraZeneca? What should Ramesh do?
So again, Cheryl, if I come to the short-term formations, the counter has been sideways, laggard. Yes, we saw some kind of announcement coming in the month of May, and the counter went up crazily, and most of the people actually stuck on that first move itself. But right now the counter is in sideways consolidation. Seems to be 3,400 seems to be the good support level. Right now it's at 3,650. So extreme short-term view, I would say take an exit and move on to Lupin Pharma, which is looking good in terms of momentum. But if you have a mid-term view, hold on to it. Counter is nothing wrong. This entire sideways consolidation is without volume. So I would say that someone who accumulated right near to the bottom is still holding on to the position. So keeping that in mind, I would advise mid-term view as a hold. If the counter moves about 3,800, then 4,550 to 4,600 seems to be on cards. Over to you.
All right, Mayank is looking at Everest Industries as well as IG Petro, and he's holding on to both Everest at 350 and IG Petro at 600. Ashish, should he hold on to this? What are the views here?
Yeah. I think both the stocks are good fundamentally, and though from peak Everest is down by almost 10%, but looking at the growth prospects in the company, I'll advise to remain invested because there's slight profit taking happening in mid and small cap stocks. So need not to worry because fundamentals are quite good. As far as again IGL is concerned, again gas stocks in my view will continue to do well. And both MGL, IGL, Gujarat Gas all have really done well in last 1 month. And my suggestion will be to remain invested in IGL also.
Next one is for you, Ashish, as well. This one is from Feroz. He's talking about Angel Broking. He's got about 350 shares of Angel Broking, which he's purchased at 747 rupees per share. He wants to know whether it's a good stock to hold for the medium to long term. Ashish, what's your take on Angel Broking? Definitely, this particular stock is is actually on a lot of people's radar of late.
will continue to do well for next 1 to 2 years. Again, the reason is the kind of momentum that we are seeing in account opening by retail players, particularly companies like Angel Broking, ICICI Securities, they'll continue to do well. Even if you see last 2 quarters numbers of Angel from 73 crore profit, last quarter they did almost 100 crore net profit. So, and almost 4.5 lakh accounts there per month. So, this is something like which will take a stock to new highs in coming months also. So, broken stocks, I am very bullish, and 1 year time in 1 year time frame, Angel even can touch 1200 mark. So, remain invested here.
Apparently got 6.97 crore demat accounts, and that's incredible, the kind of run that we've had. Ashish, clearly understandable why you're bullish on brokerage companies. We've got a viewer who's been asking this query for a while, so I'm going to take it right on top. Mr. Bhatia, you've been asking about GIC Re for some time, and the stock is currently trading at 149. You say that you bought at levels of 435, and you're asking whether to hold or sell at this juncture. Ashish, I know that people say that insurance and therefore reinsurance is a business you play for the long term, but this is a big deficit to make up. Should he hold on?
Yes, I'll suggest to hold on, particularly insurance stock, because I'm quite bullish on prospect of general insurance as well as life insurance per se. Again, the rationales are the kind of premium rise they have given, particularly if you see vehicle insurance or health insurance, like they are going to be major beneficiary. And in my view, the claims related to COVID, etc., are also going to come down gradually. So again, there's no such claim related risk are there in life insurance as well as non-life insurance. So you can remain invested in this particular stock, but at the same time, look at stocks like ICICI Lombard, which has really given very good returns, because a lot of institutional investors are buying more private insurance companies rather than government-owned companies. So if you want to add on in this particular sector, in my view, ICICI Lombard can give you better return.
All right. The next query is from Zafar. He wants to know about Nalco, whether he should buy this at current market price. Kunal, what's your take? Nalco, is it a buy at current market price?
So Cheryl, if I look at the overall formation again, the stock is clearly in uptrend, making clear higher top, higher bottoms. In fact, the last week, I mean that's on Friday, the counter was came out of the entire sideways consolidation of last 20-25 days, and today also it's buzzing in trade. So yes, it's a clear buy. At 79, I would say the risk reward ratio may turn little unfavorable for the new entrant. So let's wait for some kind of correction. If you're an aggressive trader, yes, you can think of buying at 79, keep the stop loss of 73 and expect the target of around 89 to 90. But if you're a kind of defensive player, let's wait for some mild correction to come in. Stop loss would remain the same at 73 and the target will be 90 itself. I am positionally very bullish on it, and I'm expecting the counter to reach 125 zone, say in next 6 months time.
Alright guys, if you're tuning in on any one of our social media platforms, also tell us what you think about this program, and don't forget to hit the like button if you like the content. We've got Prasanta Ray who's asking for a fundamental view, Ashish, on Heritage Foods. Are you positive on this counter?
Yeah, looking at listing of Dodla Dairy today, in my view, all these stocks will continue to do well going forward also. And again, the milk, particularly milk and milk derivative products, are getting a good distribution reach. And Heritage is again a company which is having very dominant player in southern market, where even Dodla Dairy, which got listed, is there. So compared to Dodla Dairy, in fact, I find the valuation of even Heritage Food are much promising. And yeah, my suggestion will be to remain invested in Heritage.
All right. Next one is from Sagar. He wants a technical as well as a fundamental view on Tasty Bites Eatables. He's saying it's a small cap company. It's not very liquid. He's bought about 50 shares at 3,000 rupees per share almost 5 to 6 years ago. He wants to know whether he should continue to hold the stock. I will get you the fundamental view if Ashish has one on Tasty Bites. Ashish, do you have a view on this particular counter?
Yeah, this is a stock where we don't talk much because very low floating stock is there, and stock price is also 15,000 plus rupees. At the same time, market cap is around 4,000 crore, but as floating stock is very low, so slightly we don't talk too often about this stock. But looking at the fundamentals, company looks pretty good. If you see last 2 quarters, also as I remember, they did a profit of 18, 19 crore last quarter, and previous they did 13 crore kind of profitability, and debt-free kind of company this is. So only thing is, if you are having a long-term horizon, particularly in food sector, then this is a good company to keep in the portfolio. But you should not buy this stock for 3 months or 6 months perspective. But long run, it will give you very good returns.
Okay, we've got Sudeep who's asking about Camlin Fine, and this is a counter that we get questions on every so often. He's got 2,500 shares of the counter at 64, and he's asking if this is a good long-term bet. And he's also asking whether it can be added at current levels. So, Ashish, I'm coming to you on the fundamentals since it's a long-term query, and also how do you see it placed positionally? Do you think that adding now would make sense?
Yes, always like chemical stocks, particularly for last 1 year, have given very good returns, and particularly those companies which are into specialty chemicals are doing pretty well. So Camlin Fine is also a stock we have seen almost 50% rise in last 1 year, and from a high of almost 200 rupees now stock is trading at 175. So my suggestion will be to keep on adding such stocks on some decline always, because again, debt-free status of companies, and the product range is also pretty good. So they will continue to do well. So my suggestion will be, if you want to add this stock, around 165 to 160 is a good level to add on. And in 1 year time, again, you will see 200 plus in Camlin Fine.
All right. This one is from Mr. Balan saying that he has 2,000 shares of Union Bank, 1,000 shares of PNB, which he's purchased at 10% price, which is lower than the current market price. He's asking whether he should switch to J&K Bank, or should he go ahead and add on to Union Bank and PNB. What's your take, Kunal, coming in on this? Should Mr. Balan stay put with his holdings in Union Bank and PNB, or maybe look to add some more, or should he take a switch to J&K Bank?
So, Cheryl, this entire PSU bank segment has seen some kind of momentum in the recent past, and that's the reason that's turned out to be an eye-catching for most of the short-term players. But at the same time, if I look at the formations, they are not bad at all. So, Union Bank, yes, it's been a bit of a laggard, but at present levels, that's 39.40. It seems to be fairly poised. So, I would not really advise to switch over from here to J&K Bank. At the same time, PNB is a counter which I'm very closely monitoring and tracking because of, again, the formations itself. Just waiting for the counter to give a breakout of 45 zone. The day PNB goes above 45, it's right now trading at 43. So once it closes above 45, I think it will open the doors for 60 to 65 zone. Now, as of now, it may sound little, ridiculous. Reason being the formations are pretty sideways. But yes, that is the entry level for the new uptrend. So in both the counters, I would advise to stay invested, avoid J&K Bank for time being. The momentum has already begun there. But PNB is to watch out for. And I would advise one more counter, and that's IOB, Indian Overseas Bank. Today in trade, it's trading at around 6.5% up. 26.5 is the current market price. That is already out of consolidation. Keep on, switching, or if at all you're planning for, then advisable to move on from Union Bank to IOB, Indian Overseas Bank.
PSU banking pack is buzzing in trade today. The entire pack was up over for 1% when I checked last. We've got Somesh who's asking about Galaxy Surfactants, another chemical company, Ashish, for you to talk about. Would you suggest that this is also something that you can hold in your portfolio for the long term?
Because again, the rationale is they are the ones who are supplied to all the FMCG companies, and the way we have seen demand growth in FMCG companies' product, Galaxy Surfactant being a major supplier will also stand to gain. So I like companies like Galaxy Surfactants or Rosari Biotech in this particular space, and like they'll continue to give good returns to investors. So my advice will be to buy at this level Galaxy Surfactant.
All right. This one is for you, Ashish, and this one is from Santi on Responsive Industries, saying that the stock has rallied from sub 100 to 203 highs of 203 rupees per share, saying that the stock currently looks to be in some sort of a consolidation phase. Wants to know whether she should go ahead and buy this at current price point or not, given, and also wants to know what's the fundamental structural growth story of Responsive Industries. How does this counter look, Ashish? What should Shanti do? Go ahead and buy, or actually steer clear out of it?
Actually, I'll suggest to stay out of it. There are various reasons for this. First of all, company's market cap is huge, almost 3,900 crore kind of market cap. The profit they make is around 10 crore, like what they did last quarter. Before this, I think there was loss also, and it's a 1 rupee paid up stock. So stock is highly overpriced, if you ask. So my suggestion will be to exit from this stock, because valuation does not justify the kind of numbers companies having.
Okay, we've got a question coming in from Emmanuel on Jindal Steel Hisar today bought today at 200, quantity of 250. Please let me know what the target should be if you can add more. Kunal, obviously this seems to be a question for you. On the charts, how's Jindal Steel Hisar looking?
So, Alex, if I look at JSL and JSL Hisar, both counters are looking very good. They are clearly making higher top, higher bottom formation. So, at the present level, also, I would advise to add. If at all it comes down a bit, say by around 2.5-3%, it's a clear buy. So, but out of those two, that's JSL Hisar and JSL. I would prefer JSL, not the Hisar one. The only reason being the structural formations are a little different. But yes, there is no harm in holding on to this counter. Also, the trend is very strong. 207 seems to be the best level to add. Even if it comes down to 202 to 203 kind of levels, please hold on to it. Don't look at the counters from short term perspective on this space as such, because the momentum seems to be very strong, and you will be rewarded better if you hold on to your positions.
One is from Nino, is asking that what is the view on quick heal technologies for the longer term? Ashish, quick heal, how does this look over the longer term? If someone wants to look to invest in it, does it make sense?
Yep. Like as a part of again IT pack, and the kind of return, or sorry, the kind of earnings which came out in this particular quarter was an eye-opening. What is happening in particularly in security, IT security space, because now more and more people are working from home and they require more individualized security. So kill, quick heal virus protections, etc. They are getting very good traction along with enterprise. Now individual market is also quite robust there, and we have seen the last quarter net profit went up by almost 550%. So those stock is at 50 to be high, but in my view this will continue to do well at least for next couple of years. So my suggestion will be to buy this stock even at this price.
Okay, we've got Akash Raj who's asking about Tata Consumer. It's not doing too badly in trade today. He's asking whether it can be bought for the current price and can it be held for the long term. I'm going to come to you, Kunal, on the charts because it's specifically a question of whether it can be bought at the current price. How is it looking on the charts?
Extremely strong, Alex. So again, trending counter, and in such trending counters, I would always advise not to buy on the breakout, because these are not actually breakouts; these are trend continuations. So as far as the trend continuations are concerned, we need to buy on the decline. Keep the support levels in mind, and the support level for counter on a short-term basis is 752 to 753. So that's around 15 points lower than the present level. That's around 2%. So let's wait for the consolidation to come on the chart and buy. Yes, it's a clear buy on every decline till the time this trend remains intact. But I would not really advise to looking at the higher levels of 767 to be bought at this level. Let's wait for some consolidation and then we add more.
All right, this one is from Giant. He wants to know why are the power stocks actually falling. He has about 1,000 shares of Reliance Power as well as Adani Power. So he wants to know what's the rationale behind the fall. How are the charts looking for both these counters? More correction is due, Kunal?
So, Cheryl, this has been the discussion on the streets anyway. If I look at just Adani Power, forget about Reliance Power, we just talk about Adani Power for time being. So, the madness really began on the counter from 105 level itself, sideways consolidation and breakout. Counter went up to 165 in just 3 to 4 trading sessions. It has come back to the same zone, retested the zone, and now again showing some kind of momentum. So, yes, technically, if someone wants to buy Adani Power, I would say buy at the present level, keep the stop loss of 105 and hold on to it. I really don't know the rationale behind why the stocks also rallied this way and why the stocks are down. But looking at the price action, I can definitely say that this is a good level to enter Adani Power. Keep the stop loss of 105 and the target can be say 155 to 160 again.
Okay, Rajat, I promise I will take your query, but I'm going to take Neeraj's query first. He's got 2,000 shares of Granules India at levels of 320. Ashish is looking to hold for the next 3 to 5 years. This depends on the steel story as well. Would you suggest that it's a good idea to hold?
Yeah, Granules is a pretty good stock idea as far as pharma sector is concerned. The stock has already corrected quite a bit from 440 levels to 300 levels. Nothing wrong fundamentally, only last quarter numbers were not as per expectation and slightly in mid-cap pharma stocks are not moving. But in my view, company will continue to do well because they have very strong pipeline and good management per se. So 300 is always a good level to add on Granules. Again, in next 1 year, you will get 420, 440 kind of level.
All right. The next query is coming in from Padma Balan on JP Power as well as Schneider Infra. Has about 5,000 shares of JP Power, purchase of 4 rupees per share. 1,000 shares of Schneider Infra at 131 rupees per share. Wants to know what should she do, hold, sell or switch. Kunal, what's your take coming on this?
So again, Cheryl, honestly speaking, I don't track both the counters actively, but if I look at JP Power chart right now, it's at 5.45. See these penny counters. I mean, the volumes will not also depict the correct accumulation or distribution. So I generally avoid trading such counters and would advise to exit because the only reason is that even if the counter goes into lower circuit and if our charts are suggesting an exit, the one positional trader may not be able to take an exit on the same. So JP Power, I would straight away exit. And the second counter, I'll just come back to you in a second. I'm just hunting for the counter on the screen. You can move on to the next query by then.
Don't worry about it. We understand when you don't track a counter, and I'm sure our viewers also understand that. We've got Rajat Priyadarshini, Kunal, and you should look at these two, the battery manufacturers, right? Amara Raja Batteries and Exide Batteries. He's added this into his portfolio last month, and he needs some views for the next 6 to 9 months. Should he hold on to both of the counters, or what level should he look at for an exit?
So yes, Alex, if I look at Amara Raja battery, that was anyway my one of the recommendations. Also, if I look at the counter right from 1,000, it came down to 700, consolidating near to the bottom itself. And now it's showing some kind of reversal coming in. And this correction has been exactly halting at say 38.2% as per Fibonacci ratio. So risk reward ratio is extremely favorable. One can think of even adding Amara Raja in today's trade also. Keep the positional stop loss of 730, and the first target on this counter can be 825, and once it crosses that 825, I think the new highs are again on cards because the structure is very positionally, I mean very attractive. When it comes to Exide batteries, Exide Industries, now this counter is right now at 185. Sideways consolidation, but momentum is as of now missing. Formations are very attractive, symmetrical triangle, but I would wait for the counter to give a breakout of say 190. Once this counter goes above 120 with the stop loss of 175, one can think of adding with the target of 210. But yes, on both the battery manufacturers, the view remains bullish.
All right, those are the queries, and we've come to the end of the query segment, but time for high risk and low risk ideas. So Ashish, I'll come first to you. What's your high risk and low risk ideas for our viewers today?
Yeah. One high risk, high return idea I like is Lasa Super Generics Limited. This is a a company again we don't talk much, but has got very good potential because they are into both human APIs as well as veterinary APIs. They are having almost 300 plus clients, and most of the top MNC veterinary companies are buying now products from them. Besides this, now they have recently launched hormones like progesterone, etc., which is again getting very good demand, particularly. So, API company which is market cap of 330 crore, you can't go wrong here. So, my suggestion will be to buy this stock. Again, a debt free kind of company with good management. And my target for 1 year is 114 this stock. As well as low risk, low return idea is there. Again, I'll talk about a IT company where we don't talk much, but has got very good potential. It's called Newgen Software. This is a company which into digital transformation platforms and supply based and service mainly BFSI and government sector. Just look at the performance in March. They did a profit of 52 crore with service. 31 crore they did in December. So quarter over quarter, excellent growth was there. And recently, the management sold some of the stock, around 300 crore plus stock, to all the marquee funds at 454. And these are long only and reputed names. So I like to bet again for this stock. In my view, valuations are quite compelling in this particular stock also, and can move like how Happiest Mind has moved. So for a 750 rupees target, I recommend you.
Right. And Kunal, what are your high risk and low risk ideas for our viewers today?
So, Cheryl, I have shortlisted one as the Lupin Pharma, which I have already recommended to one of our viewers on the query of Astrazeneca. This counter has given a massive consolidation breakout on the 5th of May, where the counter rallied from almost 1070 to 1205. Now, after that, the consolidation happened. Counter is back to the retesting, back to the same breakout zone and retesting the zone. Today in trade, it's showing again a reversal kind of sign. It's a positional trade. One can think of buying at 1160, which is the current market price. Keep the stop loss on the counter as say around 1120. And then on the higher side, the first target can be say 1300. Certainly, when it reaches 1300, I would advise to trail the stop loss and carry the positional. This can be one of the 6 months low risk, high return kind of idea. The second is Amara Raja battery. Just now I spoke to Alex on the same. Stock is looking very attractive, 30% down from the high levels, 38.2% correction of Fibonacci as per the last retracement level. At the present level, it can be bought. 740 will be the stop loss for the short term traders, and the first target in that case will be 800. Again, if it reaches 800 in say 15 to 20 days time, prefer to trail the stop loss and carry the position. On the position level, I expect 950 to come say in next 3 to 6 months time. So these are two low risk ideas.
All right. I do take your view. Santi is asking for a weekend program. It depends entirely on whether that's possible for us to get Kunal or maybe somebody else to join us on the weekend. We'll check on their availability. But let me thank them now. Kunal, thank you so much, as well as Ashish. You've answered quite a few queries today and you've given our viewers something to think about. Thanks as always for joining us and for taking the time. Now, we are joined by Utkarsh Chaturvedi, my colleague, who's got quite the interesting report to tell you about. There's an interim relief that has been given to Franklin Templeton in a SAT order, or rather by the SAT against the SEBI orders. And Utkarsh is here to tell you all about that. Utkarsh, what's the latest in this?
So, three major orders were given by SEBI in the FT case, Franklin Templeton case. And the first one was that they were not allowed to come up with any new debt scheme in the next 2 years. Then there was a 5 crore penalty, and then there was 512 crores along with the interest, which was charged as the management fees, which was to be given back. Now, what the SAT has done is, one, they have stayed the order of FT not being able to come out with any new debt fund. Now, what FT argued was the fact that the other 22 debt schemes by FT, SEBI didn't find anything else, and because these six were the only ones which closed, that does not mean that they cannot come up with any new debt scheme, and SAT has kind of heard this logic and given this stay. Then, speaking about the 512 crores and 5 crores, what SAT has done at this point of time is they have combined both of them and have said that around 250 crore rupees will be kept in an escrow account till the time the next hearing is there. So the 512 crores which had to be submitted to SEBI, that's on hold, but around 250 crores plus amount is something which has to be kept in an escrow account in front of SAT within 3 weeks, and then the hearing will go on. Until the next hearing happens or any other order happens, there will be the SAT order will stay till this point of time. FT can go ahead and launch that scheme. Then the 512 crores comes almost half to 256 crores at this point of time. So relief for FT in this case, given there were three orders more or less, they managed to get relief on one when it comes to that scheme and gotten the amount which had to be submitted almost half of what was ordered by SEBI.
Thanks so much for that update, Utkarsh. It's certainly something to watch out for. All right, we're slipping into a short break, but more on the other side. Do stay tuned. We're coming back with more.
Is a numbers game, and it sometimes does